Let me go ahead and introduce myself. I'm Dean Lynch, Executive Director of the Virginia Association of Counties, and welcome to the Virginia Association of Counties Premier Partner Spotlight Series. We're so glad that you could be here with us, Garrett, and all the other callers that call ins. Glad you all could be here also. A little bit about the VACO Premier Partner Series. This VACO Premier Series gives us an opportunity to highlight our partners who provide products and services that can benefit Virginia counties in a variety of ways. We're proud to welcome Garrett Macdonald, cashVest 3+one. Hey, Garrett, good to have you with us. He is the Senior Vice President of cashVest by 3+one, and he's here today to tell us how cashVest by 3+one can help Virginia counties generate higher interest income on every dollar. Garrett, if you wouldn't mind, just jump in and tell us a little bit about cashVest 3+one, what you guys do, and how you can help Virginia counties now, and also thinking about the American Rescue Plan and what you can do to help guide counties as we get these allocations from government.
Thank you so much, Dean. Thank you for your time today, for all the participants' time today. First of all, we would really like to just say thank you really for everyone's continued service to your communities. No doubt this past year has definitely not been easy, and we've seen so many public servants really lean into what they do. So thank you so much. Thank you to you, Dean and Carrie, and the whole team at VACO and the National Association of Counties. Thank you for your endorsement of this program and your stamp of approval. So we really appreciate being able to bring this new data technology and these tools to taxpayers. And so we're going to tell you a little bit about the results of cashVest today. We're not going to be long, and we're going to get right to the point. We want to be respectful of your time. At 3+one, we really believe that public service is our service. Our founders are public servants themselves. We're very involved in the community. And part of that is looking under every stone to identify, are there ways potentially to earn and save more on one of the greatest assets that counties have, and that's their cash. There isn't one public servant that we've met throughout the 11 state association partnerships that we work with nationally who hasn't said, Garrett, we really don't need more data on cash and liquidity. Pretty much every public finance official we work with says, Garrett, if you can give us more data to help us increase value on cash, we'll take it. So what is cashVest? Really, cashVest is a program that uses bank data to enhance a county's cash management outcomes, to really provide future liquidity forecasting, to offer one consolidated view of cash across all banking partners, and probably arguably one of the most important tools that we bring is stress testing. Tell an entity how much cash they have, how long they have it for, what the available options are in the marketplace. So public CFO, boards, constituents, taxpayers can always ensure that they're maximizing the value on all cash, all taxpayer dollars. Again, there's really not one public finance official that would say, Garrett, we don't want to take advantage of a program that will help us maximize the value on taxpayer dollars. And Dean, it's interesting because Virginia counties in total from the American Rescue Plan Act will receive about $1.65 billion. That means on average, I calculated it a little earlier, that all 95 counties will receive approximately $17.5 million each. And even the smallest public entity that's not necessarily a county will receive $425,000. So aside from that, our data shows from working with public entities all over the country, from California to Suffolk County in New York, which is a case study we're going to share a little bit about, that there's a significant strategy needed around receiving these funds. 50% of the cash will be paid now. 50% of the local recovery funds from the American Rescue Plan Act will be provided 12 months from now. And the dollars have to be spent within 44 months. And one thing that we've learned from the CARES Act to those entities that received funds from that is sometimes it might seem easy to spend money very quickly, but when the CARES Act coronavirus relief funds were provided, we were told, listen, to spend those monies by the end of the year would be challenging, and having a strategy would be very helpful. So just some opportunities on those dollars include really during the midst of the pandemic, Suffolk County, New York, $3.2 billion budget, Dean. They reduced their banking fees. When you get an influx of cash in to your bank, if you're not right-sizing your banking agreements at the same time, you're going to miss out on investment opportunities. You're going to increase your fees. And without having a strategy to optimize your overall treasury structure, you're going to miss out on some potential negotiations that you could have that just improve internal cash flow management, internal liquidity data to stakeholders. For Suffolk County, again, a $3.2 billion budget, right during the depths of the coronavirus pandemic, from March of 2020 through March of 2021, generated an additional $2.4 million from this program. Again, arguably during the greatest financial disruption to public finance, that is something that could not have been achieved without cashVest.
Hey, can I ask a question really quick? Not to interrupt you, hate to interrupt you, but in looking at what you guys did in New York, was that basically what you call as a liquidity analysis study that you did? And because it seems like that, in my research of understanding what a liquidity analysis is for counties, that's deals with offsetting banking fees, looking at borrowing and savings opportunities and things like that. And it sounds like that's what you did in New York to generate that kind of savings there.
That's absolutely right, Dean. Liquidity analysis is putting a time horizon between when you take $1 in deposit to when you spend that dollar and what you're able to do with it between then. And there's a lot of opportunities to maximize the value of cash, and liquidity analysis is the key to unlocking that. Even for small counties, Dean, the smallest entity that we work with right now has a $3.9 million tax levy, right? A very small entity. And over the last 12 months, the trailing 12 months, that entity generated $42,000 in additional value from cashVest. Now, that's over 1% of that entity's tax levy. That's revenue that normally would have to be raised in raising taxes. And so liquidity analysis, to your point, Dean, is using data that you have at your fingertips, but it's really putting it into practice and allowing cashVest by 3+1 to bring some new tools, new opportunities that help you maximize cash management outcomes. And Dean, I don't know about you, but a lot of entities that we talk to, they say, Garrett, data and technology is not something I need to hear more about. We're being inundated with it on a daily basis. But hey, if you can use this information and help me implement it, that's the key, right? Is can you take data and information on cash, transactional data, every debit, every credit, can you stress test it and help me implement it so that I don't have to spend extra time? Nobody has extra time right now, right? Our data shows through analyzing cash and working with public entities around the country that 100% of the individuals in the beginning of using liquidity analysis in cashVest, Dean said, I don't have time to do this. Those same individuals 1 year later said they couldn't operate their internal treasury office without cashVest. And that's something that we're really proud of. We're really proud of. I'll give you another example, Dean. Beaufort County, South Carolina. Again, we work with entities all across the country. They have a $126 million general fund operating budget, and we've been working with them roughly since 2016. Just in terms of providing time back in Treasurer Maria Wall's day is really the greatest benefit for her. Is we're going 1,000 miles an hour in 1,000 different directions, she says. cashVest liquidity analysis is going 1,000 miles an hour in one direction, and I need that type of resource to maximize what she has, a very robust investment portfolio. And so even though it's a little bit of a smaller entity, since 2016, liquidity analysis has been the key to generating $14.4 million since 2016. So it's worth saying, when we bring benchmark data, Dean, and we compare entities nationally with the National Association of Counties and publish reports on what cashVest is doing, the entities utilizing these opportunities are significantly outperforming peers. And we want to try to bring those resources to counties all over the country, but particularly to Virginia counties is why we're here today. We really care about bringing these new data resources, and cashVest is an opportunity to really get into the weeds, and we want to do the work. We want to provide the types of data that can help entities maximize the value on their cash, maximize the relationships with their banks, and overall, that has brought $400 million in additional income nationally to public entities that we serve. So our goal is to really raise the bar in cash management outcomes. Again, these are new opportunities, and these are new ways of looking at cash and liquidity data. So it's really important to note, Dean, the banking industry in general, because of this additional cash, is going to see a change, right? When you add about $5 to $10 trillion in cash, that does something to the banking system. A lot of listeners today are probably hearing their banks lowering interest rates, increasing compensating balance requirements. The benefit of cashVest is that you can still make it through all of those circumstances that we can't necessarily help and still come out on top. And that's what we want to try and bring to the members of VACO. And we really appreciate the opportunity to be spotlighted today. The liquidity data, the overall cashVest program is going to help members, Dean, improve cash management outcomes. And we'd be glad to share case studies, and we'd be glad to answer any questions that anyone might have for us, so we can bring some information back to them.
Garrett, I've got a quick question that somebody wrote in, and this sounds really good for Virginia counties. Sounds something like that that many of our counties could utilize. And and many of our counties could utilize. And so what do our counties need to do to get a financial picture like you can provide?
It's a great question. And when we talk about cashVest and maximizing the value on your cash, right, sometimes it can seem very high level. All we need is transactional data. So typically we get view-only access, which is the safest and most secure way to get transactional data, or we get what's called secure transmissions of transactional data that's anonymous, so that we can aggregate and we can provide the analysis. It's very easy. The onus is on us. So all we need is that bank transactional data along with any investment data that an entity might have. We also garner budgets and financial statements online. Great question.
And would you be willing to reach out to treasurers in the counties. Right now, treasurers usually are the ones working with their county administrators on investing county dollars. Would you be willing to reach out if you can get an intro to a treasurer who may be interested in this also?
Absolutely. And in addition to that, Dean, it's worth saying we know that there's so many competing priorities right now, right? We want to be really respectful of everything that's going on. But these local recovery funds brought forth by the American Rescue Plan Act do require a strategy, right? And so we would love and be honored to have a conversation to see how we can bring value to entities in Virginia. We would welcome that opportunity.
Thanks, Garrett. Carrie, are there any questions that you have from the chat?
Dean, here's a question. What are some factors to watch for that could change liquidity patterns for entities in 2021?
Great question. One of them certainly will be the local recovery funds brought forth by the American Rescue Plan Act. We have heard that some entities are ramping up some projects that they were going to have, but because of this influx of funds and the ability for them to reimburse themselves with this, they're needing to look at their cash flows a lot more in depth, because when you're receiving a significant amount of money, and in addition to that, we're still in a pandemic, and some would say that they're still monitoring budgets and monitoring revenues very closely. And so looking at the liquidity data, again, the difference between cash flow and liquidity is cash flow is how an entity is currently looking at cash. It's how they pay payroll, accounts payable. It's how they're operating in general. Liquidity is how the market is looking at cash. And right now, the marketplace is saying we just received between $5 to $10 trillion in cash. And so we need you to provide us new data, liquidity data, new transparency on flows so banks can deploy that cash. Banks are using their own liquidity data. So different areas to look at is one, what kind of banking relationships do you have? Are you working with a large money center bank that is mostly concerned with transactional business, right? They're not looking for non-operating cash. They're looking for how they can charge you for wires, ACH, check, online access, etc. Another thing is, if you're accelerating projects or you're planning projects, how can you incorporate liquidity analysis into your current cash flow? Because there's not a one size fits all solution for cash. There's an opportunity to use state pools, use local banks that are loaning back into the community, use large money center banks for technology. So it's having a strategy involved with that. In addition, entities can take advantage of new forward forecasting to be able to share what their cash position is going to be in 6 months from now. And that's a question that we ask entities, right? Is if I was to ask, where's your cash position going to be in 6 months? What is the answer? I talked to an entity recently, and when I asked that question, he said, Garrett, that's the wrong question to ask because we're really just not sure. That's part of what cashVest can bring to the table. Great question, though, Carrie.
I don't see any other questions in the chat, but I do have one more question, I guess, and I don't know if it's really a question or it's trying to determine a blueprint for the people that are on this call, on this webinar, and maybe for future people who look at this video, this webinar online. What is the blueprint for getting this information out to our counties? The way I see it is they need to refer this information to the county manager, to the county administrator, who can also work with the treasurer, get detailed information on our website. We've got all this, we've got a page set up for cashVest 3+1, and then they can reach out to you. Is that the way that you envision?
Absolutely. And we welcome having a conversation with a county manager, with any members of of boards, and with treasurers, we really appreciate the work that treasurers do, and we want to be an additional resource. These are new tools, new opportunities. So if we can provide opportunities to bring new solutions that can enhance cash management outcomes, that's good for everyone. So absolutely, Dean, we encourage county managers to just reach out to their treasurers and say, hey, is this something that might be on your radar or that we might be able to utilize? Or if it's a county treasurer, we'd welcome an opportunity to have a quick conversation and just find out, hey, how can we serve you? How can we provide some of these outcomes to your entity? Because again, every public finance official that we poll and that we work with in the beginning said, Garrett, I really didn't think that there was opportunity to improve. I really didn't have the time to look at this. And frankly, I didn't really think it was that important. But a year later, every single one of them said, wow, I really don't know how I did this without this new tool. And so we're really proud of the proven results and would welcome and be honored to have a conversation with any member of a county. Absolutely.
Carrie, are there other questions?
Dean, I don't see any other questions.
All right. Well, Garrett.
Dean and Kim, yeah, we thank you so much, the whole team here, and our website, 3+one.us, has so many resources, case studies, blogs, and information on how we can help Virginia County. So thank you so much for the opportunity today.
Garrett, I'd like to really thank you for participating today in the VACO Premier Partner Spotlight and bringing this information to our county members about the tools that cashVest by 3+one can provide to maximize the value of every taxpayer dollar. We really appreciate your support, and members that are on the call or on this webinar, please feel free to reach out to Garrett with the contact information provided on the screen. If you can look at your chat, you can see his information, or you can go to the VACO website under our Premier Partner and get all the information too, or you can contact Carrie or me, either one. I'll be happy to hook you up with Garrett and learn more about cashVest 3+one. So thank you all very much for attending and for your time today. Garrett, thanks for being here.
Thank you so much, Dean. Appreciate it.
Thank you all.
Bye-bye.